Hi everyone, it's Sarah Johnson from Homes for Harrogate, and today I'm with Rick Sherman from Howard Matthews Accountants. Hi Rick.
Hi.
So we're talking about the exciting topic of tax for landlords today. Possibly not the most exciting topic, but one that's very important, especially with the landlord tax changes coming in from April this year. So I've reached out to some of my landlord clients and asked what they'd like to know. So I've got a couple of questions for you, Rick, if that's okay.
Yeah.
So the first one is, I've got a client and he's looking to sell his investment property and he wants to know if there'll be any change to how he pays capital gains tax to HMRC on his tax return.
Yeah, so the way it works at the moment is that if you sell a property and you make a gain, you have to calculate the gain and put it on your tax return. So you might have, and there can be quite a long time between selling a property and actually calculating the gain and paying over the tax. So, I mean, it can be up to, over a year and a half. So I usually get told a year down the line I've sold a property from one of my clients. It's going to change from April. So you have to, within 30 days of completing, you have to basically make a tax return just to report the gain. And calculate any tax due and pay it over within 30 days. So in a similar way that when you buy a property you have to pay stamp duty over in 14 days. So you've really got to involve your accountant or tax advisor from the start, because you only have this 30-day window. It's the same rules that have come in the last few years for non-residents. And when those rules came in, people who are selling property in the UK who are outside the UK weren't aware of these new rules, and there's penalties for not filing on time. So you've only got 30 days to be able to calculate that, and you'll still pay the same rate, 18% or 28%. And you basically, when you come to do your tax return the following year, you'll obviously have already paid most of the tax already, or you get a little refund. So it all gets taken care of then.
So that's from April this year, and it's going to 30 days then?
30 days you've got to pay.
On sale of the property. Lovely. So I know that, for example, if my client had previously lived in the investment property before he rented it out, he would get tax relief when he did come and sell it. Is that still going to be the same in April?
Yes, but again, bad news, it's going to be restricted somewhat. So currently, if you have previously lived in the property as your main residence, then the final 18 months of ownership is effectively tax-free. Whether you've lived in it or not, or you've rented it out and that last 18 months or is empty. So from April 2020, that is going to go down to 9 months, so the relief's halved. The other thing is that for people who have lived in it previously and then rented it out, you would also get tax relief for some of the period that you rented it out, and that would reduce the tax that you pay. However, that's going to be abolished. Previously up to £40,000 of the capital gain would be tax exempt, but that's going to go unless, which is quite rare, you actually lived in the property at the same time as your tenant.
Some people do.
So some people do. So again, it's worth discussing these issues with your accountant, and I've done a few calculations with clients to say, well, what's the effects of these rules if I sell before or after April? So it's getting quite close to April now, but some people are just seeing what the effect will be and how much tax they may pay, and it may kind of help with negotiating selling price, because then they're going to have to pay over more to the revenue.
But you still get 9 months tax.
Still get 9 months.
Lived in it before.
Yeah, it's all kind of apportioned over how long you've owned the property, so it's not completely being abolished.
Perfect. So we have done a previous vlog before on the tax relief available on mortgage interest. Is that changing?
So landlords should be familiar with these rules because they've phased in over the last 3 years. So from April, they're kind of fully coming in. So for mortgage interest, the tax relief is now just restricted to effectively tax relief at 20%. So higher rate taxpayers who've previously been getting relief at 40% or 45%. We'll probably have already seen when they're filing the tax returns that they're having to pay a bit more tax because of these restrictions. But as I say, people should be familiar with those, and it's just fully phased in, and that's just the one of those changes that has been a bit of a pain over the last few years, but it's kind of, people should be used to it by now.
So you can help obviously landlords with their investment properties, tax, all their accounts, everything like that. If they want to get hold of you, Rick, what's your phone number?
So you can contact us on 01423 524 322. I'm the tax partner at Howard Matthews, and I help a lot of clients with wanting to buy, sell property, how to structure those sales and purchases. With all of this, it's we've got another budget coming in next month, so all could change again. So it's a case of, as I've said, just get in touch with your accountant, and I'm quite proactive with telling my property clients with what the changes are. So just keep in touch, and that's the best way to plan.
Lovely, and we'll be sure to update you once you've updated me if there's any more changes.
Yeah, hopefully better news.
Yeah, perfect. Thank you very much. Bye.